Snipers, you have to see what's happening to the Bitcoin price this Friday as we're heading into the weekend where the markets are the most manipulated. And exactly as we talked about yesterday, after Bitcoin closed hourly and 4-hour candles above 47,000 US dollars, where we have this weekly open, we saw a push up to test 49,700. And now we face this extremely important resistance level. And the prediction that I've had over the last few days is that the Bitcoin dominance chart is in the early stages of a reversal. And this is despite many analysts on YouTube, I've seen them all, talking about Bitcoin dominance continuing to fall. We have not formed any further lows since the May top, and since then we've only formed higher lows. And for us to look at market structure with a chart like Bitcoin dominance probably isn't the best idea. We just want to kind of monitor the more simple indicators like these lows and these higher lows that are forming to understand the fact that this chart is extremely correlated to the DXY, and the DXY is starting to push up due to a lot of political changes right now with the US, right? You know, we're seeing them pull out of the Afghanistan war. We're seeing the potential of interest rates starting to come up, and this moving the DXY up is going to affect Bitcoin dominance, because remember in 2018 when we saw the DXY starting to move up, and this is credits to Cathie Wood for talking about this in her 2019 interview. As you guys know, I've talked about this. We saw the DXY move up, and that was exactly when Bitcoin dominance started to move up. And the reason this is important is because what this means is if Bitcoin dominance starts to move up, this is going to change the way that profitable traders are going to inject capital into this market. And what this means is from every consolidation since January, we've seen altcoins outperform Bitcoin. But because we've already seen a corrective move from this $64,000 to $28,000 level, I believe the market sentiment is going to change for the next sideways move that Bitcoin takes. Now, let's say we reject 49,700 and we start to see downside. I do expect money from Ethereum, for example, to flow back into Bitcoin as a hedge. We can even look at the Cardano to Bitcoin chart, but this is all going to be confirmed after 65,000 Satoshis breaks for Ethereum. And so this is still a little bit of a premature prediction, but I think it's worth talking about right now, especially with the fact that the Bitcoin dominance chart has yet to form any further lows since the top. And then we're going to talk about the traditional markets that closed today, because the DXY is pushing up, gold is still showing some strength, and that could affect the cryptocurrency market heading into this weekend. You guys are watching the Snipers channel on a Friday, and this is a very important day because Saturday and Sunday is the most manipulated in the cryptocurrency market due to CME futures markets being closed. So first we want to start here on the weekly chart, of course, because the weekly chart tells us right now that we are bullish above this 20-week moving average. And this is this yellow line, of course, and the 20-week moving average is currently sitting at this $43,000 level, and that's just below the previous weekly open at 43,800. I told you guys this was an extremely important level. The whales love to bring price to a previous weekly open because most traders are looking at the current weekly open, and that's why we keep the previous weekly open on our charts in green. And so when we come into the smaller time frames, we know that just below this previous weekly open at 43,800 is the 20-week moving average. So at this point, we can assume that the range that we're playing in is the $43,800 level towards the $49,700 level. Now, we do have this bullish continuation candle coming towards this $49,700 level. So with the assumption that altcoins are going to move into Bitcoin, that's why I've said don't short Bitcoin, of course. And let's say that Bitcoin does see a break above 49,700 because so many altcoins are just flowing back into Bitcoin that it just sees so much strength. Expect a wick towards the midpoint of this major range to 58,353. So I could say 49,700 break and potentially could bring 54,000 on the table, but I don't expect Bitcoin to stay above 50,000 without seeing some resistance and potentially come back below 49,700. So realize this, knowing that the range that we're in is this $43,800 level to $49,700 level. we can assume breaking above 49,700, hourly and 4-hour candles, the next destination is 58,000 in the more midterm, but in the short term, expect some resistance inside of this massive range, which if we were to calculate percentage-wise is about 16% range from 49,700 to 58,353. Now, let's say at any point in time, because it's the weekend, we start to see some downside. That's totally fine. Number one, altcoins are most likely going to not perform as much as Bitcoin and are going to bleed further. And the reason that is if we look at market cycles in this market, when Bitcoin comes below the 20-week moving average, that's typically when altcoins bleed against Bitcoin. And so since we've already broken the 20-week moving average, we can already assume the sentiment is in that favor. And so with that in mind, if we start to see a pullback, remember, the only way to hedge this is to get altcoins back into Bitcoin or short the altcoin with a small amount of capital with a little bit of leverage to equal your spot position to at least have hedge against downside. But realize this, 43,800 breaking at this point is going to be the make it or break it for me. So I really don't care if we see sideways price action between 49,700 and 44,800. If we break 43,800 though, that would be the first sign of concern, because that opens the door to see downside to 34,788. And if the market starts to get into a more fearful mode, we could even potentially come down to test 28,000 again, maybe even come just below that at 26,000 to 24,000, where we know there's a lot of volume and accumulation. And that could just be the storyline over the next few weeks if we don't get above 49,700. So it's a very important range that we're in, but I do want to address what's happening to altcoins, because we talked about altcoin season starting in January, and I told you guys even after Bitcoin topped, altcoin season was still intact. So if you held your altcoins, you did very well, because altcoins have outperformed Bitcoin up until now. I believe this could shift sentiment. And so we want to monitor the Ethereum to US dollar price, but more importantly, we want to monitor this Ethereum to Bitcoin price. Now, what I will say about the Ethereum to US dollar price, though, is if Bitcoin gets above 49,700, it's probably going to be easy for Ethereum to also get above 3454 and test some new highs. But if Bitcoin fails to get above 49,700, I believe it's going to be very difficult for the Ethereum to US dollar price at this point, with the type of sentiment that we could expect with altcoin season starting to kind of, fade away. Maybe not completely, but for now, we could maybe see further downside for Ethereum if Bitcoin does not get above 49,700. And an area of interest for me is going to be this $2,500 area where we have confluence with all daily moving averages and the monthly open. But this is what we really want to monitor, because this is going to give us the leading indicator for all other altcoins and whether or not the season is truly over. 65,000 Satoshis. If this level breaks, start to expect the end of altcoin season, in my opinion. I mean, because 65,000 Satoshis breaking shows that Ethereum is moving back into Bitcoin, and that is going to ripple effect into every other altcoin. We know how this market works. First goes Ethereum, then goes Cardano, right? Of course, Bitcoin is the major player, but when it comes to altcoins, it's Ethereum, then Cardano. Total cryptocurrency market cap chart in this range between 1.78 trillion and 2.259 trillion. So a lot of sideways price action. Typically when you have these large ranges, I do want to give you guys a little bit of a quick food for thought here. When you have these large ranges, a lot of times what you can assume is the midpoint of the range is going to act as some sort of resistance area. And so, notice how when we got into the range of 1.78 trillion down to 1.1 trillion, we did come down into the range, but we stayed above like kind of this midpoint of this channel, where at one point it acted as resistance. At first it acted as support. And so we can assume maybe we'll see some downwards price action into this weekend. I don't know. This might be a downward price action weekend bias because we're already at the midpoint of this channel, which we've yet to test the resistance of. And so I would say that maybe the bias coming to this weekend is that we could see some downside. I mean, I'm just being honest here, because the DXY is in a point where it's pushing up right now, breaking highs from April. And so now we've seen the May bottom for the DXY, and now it was, a strong few weeks since Jerome Powell started talking about interest rates. this right here is why I'm so bullish about Bitcoin dominance right now. And so Bitcoin dominance goes, up when the DXY moves up, because with the DXY moving up, people are less prone to keep their capital in assets that are more apt to downside and risk. And so every other altcoin outside of Bitcoin have such a small market cap that they're just inherently more risky. So that's why you see kind of like Bitcoin acting like what gold acts like in the traditional markets. And so, what we really want to monitor is this Bitcoin dominance chart and others dominance chart, but Ethereum to Bitcoin is going to be the confirmation. And so Bitcoin dominance, in my opinion, is going to start to move up. We go on the weekly chart, we've already tested the 20-week moving average. So, since the top for Bitcoin in May, we've kind of put the brake here. And that's why when things start to slow down, that's when you want to start assuming a potential reversal. We get the confirmation for Ethereum to Bitcoin coming below 65,000 Satoshis. The next thing we want to watch is the 20-week moving average sitting just below 47% dominance for Bitcoin dominance. That's the confirmation that altcoins are going to bleed further, and Bitcoin is going to be the hedge over the next few months. And so with the DXY, once again, if we start breaking 93.82, I think that's where we're going to see a lot of concern for traditional markets like the S&P 500, because the range that this pushes us back into pretty much, removes a lot of resistance levels. As soon as we come above 93.82 in the past, we've just seen the DXY trend up. And so that could start to slow down this S&P 500, and that could affect the cryptocurrency market. And another confirmation of this type of fear coming into the traditional markets with the DXY moving up would be for gold to start pushing up, because we've seen enough downside over the last year that I think it's appropriate for gold at this point to move up if we're truly going to see capital injected from traditional markets. And that would also indicate that we might see a lot more capital flow just into Bitcoin, not every other altcoin, because they're inherently more risky. And so with that being said, I hope you enjoyed today's analysis. I want to give away one of my favorite books on value investing to one of you snipers. My light just fell. All comments are eligible to win. And we'll wrap up this video. Rodrigo says, your charting makes sense. Easy to follow. Thanks much. I don't know if that's the Rodrigo from Brazil, but if it is, thanks for being a member for over the last 3 years. In our Discord, you've helped so much and have contributed so much. You want a book, send me a message on Instagram, brother. And I don't know if that's the correct Rodrigo, but I know there's a Rodrigo in our Discord. I appreciate each and every one of you snipers tuning into the channel. Until next time, snipers